This is the Market Report from the Birch Gold Group. Hi, everyone. I'm Mark Allen. Joining me today, Will Hart and Jake Kennedy from the Birch Gold Group. Gentlemen, welcome.
Thank you, Mark. Thanks for having us.
Let's start with you, Will. There's a recent happening in the state of Oklahoma where Oklahoma seems to be moving toward the gold standard. Can you explain that?
Okay, the way I understand it, again, Utah has already done it in the past where they're accepting gold as currency. So they're looking at gold. Again, the dollar is not backed by gold. To me, when I hear that when I hear gold standard, that means that our dollar is backed by gold, and that is not what's happening right now. However, Oklahoma is leaning towards saying, yeah, you want to buy something with gold? We'll accept it.
So I can walk into a store in the state of Oklahoma and pay for it in gold?
That, from what I read, that is exactly what you can do. Again, I don't know what type of change you're going to get. If the item is $100 and you walk in with an ounce of gold, are you going to walk out with $1,200 in cash and the $100 left, is what paid for? I don't know the specifics.
I think the people, this isn't going to take on, I don't think, unless everybody in every store is briefed on what to do if someone hands them an ounce of gold. So I don't think this is really a practical measure, because do people really expect to take their gold or silver in and buy a gallon of milk with an ounce of silver? Because what are people going to do? Oh, I'll give you, how much is this worth again? Let me check on my app on my phone, or what? I mean, it's...
Yeah, no, and I agree. I think that it's not a very practical idea for people to carry around gold in their pocket. But what I like about it, why I think it's a great measure that Oklahoma is taking, and Utah and other states like Kansas and Texas, I guess, are following suit, is that people are recognizing gold for what it is, that it's something that is rare, it's expensive to get it out of the ground, and it's not just a piece of paper that somebody printed.
Jake Kennedy, what's your take on this?
I think it's more of a big picture issue that these states are addressing. I think they're losing confidence with our currency, but they're listening to the people of the states who really don't have maybe much confidence with the dollar or where we're heading as a nation. And I think they're implementing these actions to show the people that maybe in the future we may not need to rely so much on the dollar, and gold could become a strong part of our foundation as a state, much as it was when the nation was born. So I think it's more of a symbolic move, but it could actually be part of a bigger move of many states that see maybe 2 years into the future where the dollar could lose dramatic amounts of its value. And because this bill's already in place, sitting there as a sleeper bill or as a, simmering under the surface, maybe suddenly it'll be like, okay, well, let's look at this paragraph. And yes, the dollar's in free fall. Yes, it's not worth it what it was, and we don't want to trade the dollar. Look, we've got this thing in place which says you can use gold, and here are some new rules about how it's used. And suddenly, in the space of a few days, it could actually be pushed to the forefront of legislation. And suddenly, it makes a lot of sense to be trading in gold and silver, and it can probably be implemented very quickly.
Historically, when high inflation and currency values drop, precious metals, gold in particular, rises, right? That's what you've been saying, Will.
Absolutely.
For weeks.
Absolutely.
So I can see, people going into stores, some people going into stores with barrelfuls of money, of cash, of dollars, yet somebody else walks in with a sliver of gold. I don't know how that'll work, but to buy their groceries, for example.
Yeah, again, if we're still talking about specifically Oklahoma, I guess that is certainly an option. I'm one of the believers that the dollar is on the way out, and that we are going to have to make some dramatic change, and I think gold is going to be a big part of that. I think, saying yes, you can use gold to buy things, I don't think is very practical, and I agree with Jake on that aspect. But at the same time, I think it's a great move to get people aware and to say, maybe I should have gold in case the dollar continues to head down this southward movement.
And Jake, would you agree with what Will just said?
I think so, because if yes, I do.
But I hear a but in your voice.
No, I think he's right. And if it makes people more aware of what real money is, and to own precious metals as maybe a hedge against inflation or a hedge against the dollar, then that's a great thing. And I think ultimately, if you look at history, when nations hyperinflate their currencies through reckless creation of money, money printing essentially, what has ultimately happened is that I don't think you're really necessarily trading gold, unless maybe we're heading down that road. But what people do, because they have gold and own gold, they need to buy something, or they need cash to pay a debt or whatever it is, they take that gold, which is rising in value, versus the money, which is flat and therefore losing buying power. So they take that gold and they trade it in for the currency at the time, local currency, in our case the dollar, in Germany's case the Reichsmark, or whatever it is, and they get a bunch of money, and then they use that to buy goods, products, and services at the time. So
but they do that, you were saying earlier, almost on a daily basis, because the dollar, the currency, changes and fluctuates so quickly.
In history shows that let's say, for example, Weimar Republic Germany and Zimbabwe and other countries that have had extreme hyperinflation. At the end of this, when the inflationary, on the chart, it's right at the tail end when it doubles, triples every day in terms of the percentage of inflation. That's when currency, what do you do with this? That's when you see wheelbarrows full of cash. And so what people do is, you have to trade. If you're trading in from gold to paper, you have to spend that money right away, because an hour later or 3 hours later or half a day later, it's lost 10% of its value, or 20% or 30%.
It goes that fast.
It does. I mean, I remember learning that during the last few months of the hyperinflationary period in Weimar Republic Germany, people were getting paid their salaries 3 times a day, and they would take a break once they got paid in the morning, and everyone would leave the offices, go into the streets and buy hard goods, products and services, or just products really, whatever it was, go back to the office. 4 hours later, they get paid again, and they go and spend it on food or stuff.
And they do that every day?
Yes, it was the end of this crisis. And so
wow.
It became a part of life for a short while anyway.
Yeah, and see, if we had a currency that would be backed by gold, that would not be the case. You wouldn't see that kind of rise and fall.
So in history, who do we blame, if anybody? Is it?
Well, the situation we're in now, we blame Nixon. Nixon took us off the gold standard. If Nixon did not take us off the gold standard, we would not have an $18 trillion debt, or almost $18 trillion debt, and we would not be able to just print willy-nilly in as much as we need. The government would say, okay, we have X amount of tons of gold sitting in Fort Knox. We can only print so much money, and there it is. And it's not, and that's why we are in the problem we are right now.
Gold standard allows countries to remain fiscally responsible.
Correct.
And that's where we have, over the last 30, 40 years, become fiscally irresponsible, because, we've got this war to fight, let's just create more money and we'll just pay for it that way. And of course, down the line, which is, we're pretty much at the end of the line here, that's when you get in trouble, when everything falls apart.
There is a very interesting article on gold, the gold standard, if you will, in Oklahoma and other states, that was in a recent Forbes column by Keith Weiner. And we have an exclusive interview that will be on our website, the Birch Gold Group website, shortly. So people should stay tuned for that and look for that in coming weeks. I'm really curious about something, and that is, are there other countries that are backed, their currency is backed by gold today?
The answer is no. There's not a single currency on earth that a currency is backed by gold. That's the problem. Everybody has a fiat currency, everybody's printing, and that's the problem that we're running into, is the percepted value of a dollar or of a yuan or whatever is questioned. And I think this is one of the reasons why we're seeing Russia, China, India, Germany so aggressively buying gold by the tons. They're not doing it because they're bored. They're doing it because they have some sort of plan, in my opinion, in motion. And I'm waiting to find out what it's going to be.
And at the same time, major corporations, universities are also stockpiling gold.
Absolutely. Billionaires, the list goes on. And again, I always say go where the smart money goes. Why are they all leaning so heavily towards gold? Why are people shying away from the market? Just the big $64,000 question is what is coming around the corner?
What would be the purpose of using gold versus cash, versus dollars in our case?
On a day-to-day basis, you mean?
Yes.
See, I don't think you would be using gold on a day-to-day basis. I think gold in these environments and situations is more used as a store of value or a store of wealth. So you buy the gold and you put $10,000 or $100,000 into gold today, and you see inflation, that gold will rise in value. I mean, let me give you a real-time example out of the Ukraine, and this is what people there, if the smart people would have done, and if they saw this coming. The crisis happened earlier this year, beginning of the year, and in that time to today, the currency, the hryvnia, has lost 25% of its value, probably more by this point. But gold there has gone up 70% in value in that time. So what does that mean? How are people using gold? Well, they're not necessarily buying goods, products, and services with gold, but the smart people, if they saw the crisis coming, or when the crisis started, they saw where this could be going, and they took their $10,000 in the bank account or $100,000 in their retirement account or equivalent and moved it to gold, rode the crisis through, and it's still going, but rode the crisis through, their cash, if they still had cash, has lost 25% of its buying power, and today buys them less goods, products, and services. So they've lost money, although it's still sitting in the bank.
They lost dollars.
No,
dollar value.
The value.
The value, so it buys them less.
Right.
They still have that money in the bank, and most people think, well, I've still got the money, but they go and spend it, and milk and gas has gone up 25%. So some people don't see that. But if they bought gold, it's actually up 70%. So what the smart money is doing, and what people are doing, is buying the gold, or should have been buying the gold, and when they need to fix their car or buy a new car, they then trade that gold in, get the increased value for the gold in the currency, not the best currency to have, but then you spend it right away. Do you see what I mean?
Sure.
So that's how they should have done it there. And I see that situation as being maybe something that could happen here. We're seeing a crisis maybe playing out over a longer period, 2 years, 1 year, 3 years, and it's going to speed up towards the end. But you put your money into gold, the local currency, in this case the dollar, will lose value, and it always is. The trend is down, and gold will go up in value. And at the time you need money, you trade out of gold into dollars,
and spend it as quickly as you can.
Yes, pretty much. And then, but store your wealth in a tangible asset, gold, silver, that is going to maintain and increase in value during these pretty tough times we're seeing ahead of us.
As we see the dollar take a dive.
Exactly, yeah.
Do you agree with that, Will?
I do. I don't see. One of the products that we sell is called a Valcomi bar. Basically, it's these. You can break them off in grams. A credit card size. I just don't see somebody breaking that off, going to 7-Eleven and go buy a big gulp with it. And then what change are they going to get? It doesn't make any sense. So
Right.
Definitely having the gold as a store of wealth. And then when you're ready to you're offsetting that devaluating dollar, and then when you're ready to sell that gold, you sell it and you get the value of whatever the gold is worth then, but at least you didn't ride that dollar down.
Now, we've talked about Utah, we've talked about Oklahoma, of course, Texas, and I believe you said that there are another 20 or so states considering using gold as cash, as currency, allowing it.
Yeah, they've made themselves aware that they're very interested. A lot of people don't trust where the dollar is heading. States are saying this is silly. We're just losing value, and they're believing more and more back towards leaning towards gold.
All right, as we wrap up, you said something very interesting a while ago, Jake, and you said hedge against the dollar. We've heard the expression for years, hedge against inflation. I guess this is a fairly new concept, the hedge against the dollar as the dollar is taking a dive.
Yeah, I think what you read and what we hear from our clients is that they're very concerned about the dollar losing value. And if you look since 1972,
1971.
71. Yeah, we've lost 78% of the dollar's buying power. And in the last 10 years, it's around 40% of that devaluation has happened. So it means it buys you, with inflation, it buys you a lot less than it did 10 years ago. So I think we're going to see that exponentially speed up over the next maybe 5 years. Because we're creating that much more money, and it's to do with our debt ratio versus gold. So what people are worried about here is that as we continue to devalue our currency via massive money printing, everything's going to get more expensive, and our dollar will buy us less. And I think therefore, and of course, some people are very concerned, and it's a real possibility that the dollar could actually crash or fail as countries and nations and people lose confidence in this fiat currency we're printing into oblivion. And as that happens, their dollars will become worth less or even worthless. And so people are trying to hedge against a catastrophe with the US dollar here. And the best way to do that, or one of the best ways to do that, is to buy gold and silver and store your wealth in tangible assets that rise with inflation.
I know we've thrown out a lot of different concepts and ideas, so we're going to invite our listeners to ask us questions. If you have a question about buying precious metals, email us at info@birchgold.com. That's info@birchgold.com. Or you can visit our website. That's birchgold.com. There is a lot of information on there. It's constantly updated. It's a great website to give you a look at why gold and silver and other precious metals belong as part of your portfolio. And of course, you can always call a gold specialist directly at 800-355-2116. That's 800-355-2116. Will Hart, Jake Kennedy, thanks for joining us on the Market Report.
Thanks, Mark.
I'm Mark Allen for the Birch Gold Group. Thanks for listening.